Welcome to another deep dive. Today, we're cutting straight to the heart of a major player in India's industrial landscape, ABB India Limited. We're going to unravel their latest financial performance specifically for the April-June quarter. That's Q2 calendar year 2025, and the first half of the calendar year as well. Our insights come directly from the source, ABB India's own press release, their unaudited financial results, and a presentation they put together for analysts, all released just now on August 2nd, 2025. Our mission really is clear: to strip away the jargon and pinpoint the crucial insights, maybe some surprising facts, and the strategic moves that truly highlight what they're calling their resilient performance.
That's right. And by going straight to these primary sources, we can really move beyond just the headlines. It lets us understand not just what happened, but kind of the underlying story of the company's current position and, well, its future direction within India's broader industrial narrative.
So let's kick things off with the financial scorecard. What did the top-line figures tell us about ABB India's performance this quarter?
Well, their revenues for Q2 CY 2025 stood at just over 3,100 crore INR, 3,175 crore to be exact. And for the first half of the year, it was over 6,300 crore. What's truly impressive, I think, is that this translates to 12% year-over-year revenue growth for the quarter and 7% for the half year. This wasn't just, good performance. It marked their highest second quarter revenue in the last 5 years.
That is a strong top line. But what's fascinating here is that their own analyst presentation hints at a softening market environment overall. So what specific aspects of their strategy or maybe market focus are allowing them to sort of defy this broader market trend? Are they seeing growth where others aren't, or is it just better execution?
It's probably a combination, really. Their ability to expand their top line, even in what might be a softer market, points to, well, very robust operational execution, and also their strategic positioning within specific high-growth pockets of the Indian economy. They're clearly capitalizing on particular demands, even when the general tide might not be, quite as strong.
Absolutely. Now let's talk profitability. What was their profit after tax, or PT, for Q2 and H1 CY 2025?
Right, PT. It came in at 352 crore for Q2 and 826 crore for H1. The PT margin was 11.1% for Q2 and 13.0% for H1, and this is a significant point. It's their 11th consecutive quarter of achieving double-digit PT margins. That's, well, a remarkable streak of consistent profitability.
That consistency is definitely impressive. But the full picture of their Q2 profitability, it seems, comes with a few crucial details. The financial results explicitly state that profitability was, and I quote, tempered by forex volatility and one-offs. Could you explain what that means for our listeners?
Certainly. So forex volatility, that just refers to unpredictable shifts in foreign currency exchange rates, the rupee versus other currencies. In Q2, ABB India faced a net foreign currency fluctuation loss of about 56.5 crore, which they recorded under other expenses. So basically, currency movements negatively impacted their costs or revenues, and one-offs are those, non-recurring financial events. In this case, there was a claim from a customer in the electrification business segment. That resulted in about 39.5 crore being netted off directly from revenue from operations. These are specific, non-repetitive things that just temporarily hit the bottom line.
Okay, so these specific external and one-time events contributed directly to an increase in their material costs, right?
Exactly, yeah. In Q2 2025, material costs rose to 61.8% of revenue. That's compared to 57.2% in Q2 2024. So this increase was driven by that mix they mentioned, the sourcing, the forex volatility, and those one-offs. It directly impacted their gross margins and overall profitability for the quarter, even with that strong revenue growth.
Right. And looking at the broader financial health, what about the company's cash position and earnings per share, or EPS?
Their cash position remains pretty robust, holding strong at over 5,100 crore at the end of Q2 and H1. They say this is largely due to consistent collection efforts. Now, there was a short-term impact because they stocked up on inventory.
Yeah.
But that's really a proactive measure, right, to make sure they can meet future demand. As for EPS, it was 16.62 rupees for Q2 and 38.99 for H1.
So what does this all mean for you as someone trying to understand a company's stability and operational efficiency? These figures, especially that healthy cash balance and consistent EPS, they paint a picture of a company that, despite some external headwinds, is managing its core operations efficiently. It's maintaining a strong financial footing. It signals, I think, a robust financial foundation. Okay, moving beyond the results themselves, the future revenue pipeline is really built on new orders. What do those figures tell us about new business acquisition for Q2 and H1?
Right, orders. Total orders came in at 3,036 crore for Q2 and 6,787 crore for the first half. But here's a critical nuance, I think. While total orders actually declined year over year in Q2 and H1, well, this was actually due to the timing of large, infrequent projects, big ticket items. The good news is, if you look at their base orders, these are the smaller, more regular, sort of bread and butter orders. They actually increased by 5% in Q2 and 7% in H1.
That's a really key distinction. And the managing director, Sanjeev Sharma, he commented on this, didn't he? Noting a cyclic correction in ordering activity in some sectors after periods of strong growth. What did he highlight as the areas of maybe weakness and growth within those base orders?
Yeah, he pointed to some weakness in process automation and also robotics and discrete automation in terms of overall orders. However, the growth in base orders, the smaller stuff, was specifically seen in electrification and motion. And the key contributing sectors for these orders included things like railways, metros, two-wheelers, mining, pulp and paper, paints, also reliable power distribution equipment, applications for electronics, and energy efficiency system drives. So that diversification really helps cushion the blow when those big lumpy orders are less frequent.
That makes perfect sense. And speaking of the future, what about the order backlog? How large is it, and what does that really signify for ABB India?
Well, this is big news for them. For the first time ever, their order backlog actually crossed the 10,000 crore mark in H1 CY 2025. It reached 10,064 crore. The strong backlog, which is well distributed across various segments and primarily made up of those robust base orders we just talked about, it provides excellent revenue visibility. That means they have a clear pipeline of work and pretty predictable income for the coming quarters. That's a key indicator of future stability and growth potential.
Okay, let's dive deeper now into how each of ABB India's business segments actually performed. Which segments led the charge, and where were the headwinds?
Right, let's break it down. Starting with electrification, it saw a significant step up in revenues, up 23% year over year in Q2. Pretty impressive. This was driven by strong backlog execution and also higher export revenues. However, their profit, the PBIT, was impacted by higher import content, that forex volatility again, changes in their revenue mix, and those one-offs we mentioned earlier.
Okay, what about motion?
For motion, they posted solid revenues, up about 1% year over year in Q2. This came from drive products and their traction business, that's the part involved in, like powering trains and other transport systems. Orders declined in Q2, but again, that was due to the timing of large orders in the same quarter last year. Think data centers, railways, metros. But importantly, their base orders in this segment actually grew, which is positive. PPIT here was impacted by higher import content, forex loss, and, well, competitive pricing in the market.
And process automation, sounds like that was tougher.
Yeah, process automation experienced more of a downslide in revenue. It was down 22% in Q2 year over year. This is largely compared to a strong Q2 last year, which had large order revenues, and also partly due to delays in project clearances and decisions in certain sectors. You know how those things go. They do expect this segment to fructify and stabilize in coming quarters, basically meaning they anticipate projects moving forward and results becoming more consistent. PBIT here did benefit from a favorable revenue mix, higher service business, and some operational improvements, but these positives were kind of offset by those forex impacts again.
Right. And the last one, robotics and discrete automation. That growth number looks huge.
It really does. Robotics and discrete automation saw massive revenue growth, a striking 181% in Q2 year over year. This was led mainly by the electronics sector through what they called seamless execution of orders in emerging segments, so delivering on past orders. Now, new orders for this segment declined in the quarter, but the revenue conversion from their existing backlog was clearly very impressive. PBIT, similar to other segments, was impacted by the revenue mix and, you guessed it, forex loss.
Those are definitely some very specific ups and downs within the segments. What about some tangible examples, significant wins or customer engagement things that bring these segments to life? I saw a detail about ABB India and Steel Authority of India Limited, SAIL, signing a memorandum of understanding for digitally transforming operations at the Rourkela steel plant. That sounds like a huge deal, really pushing India's manufacturing competitiveness.
Absolutely. That SAIL Mo is a flagship example of their strategic alignment. It's a big one. They also introduced a new LV titanium variable speed motor platform. This is designed to cut setup costs and reduce material usage, which speaks directly to their efficiency goals for customers.
Yeah.
And, this is pretty incredible, an ABB large synchronous electric motor at an Indian steel plant actually achieved a world record in energy efficiency, 99.13%. With a potential payback period of only 3 months. I mean, this really showcases their leadership in energy efficiency, which is so critical for the energy transition.
Wow, 3 months payback. Beyond that, I noted other wins too. Ultra-low harmonic drives for sustainable carbon black manufacturer, machine and factory automation solutions for a large paints and polymers company, and robotic solutions for an Indian electric two-wheeler manufacturer. These are very concrete applications across really diverse industries.
And what's fascinating here is precisely how these specific projects underscore ABB's adaptability and its relevance across such a diverse range of industries. It shows their deep domain expertise, you know. This broad reach is visible in their diversified business model, too. If you look at the revenue split for Q2, electrification makes up 37%, motion is 34%, process automation is 22%, and robotics and discrete automation is 3%. And what's more, 78% of the revenue comes directly from end users, and 84% is domestic. So this broad base provides resilience against sector-specific slowdowns and aligns really well with the whole Make in India initiative.
That diversification is clearly a key strength. Let's turn to the management's perspective now. What has Sanjeev Sharma, the managing director, conveyed about the company's strategy and future outlook?
Yeah, the MD's commentary offers I'd say, cautiously optimistic outlook. He stated, and I'm quoting loosely here, "We anticipate gradual uptick in demand with easing inflation and deeper market reach." He also said multiple sectors are expected to gain momentum in the near to the medium term. So this suggests a belief in a recovering and expanding market, basically.
That's reassuring. What truly stands out, I think, in their strategic outlook is how they position themselves. They feel strategically positioned to capitalize on a resilient macroeconomic backdrop and the accelerating pace of industrial transformation. How does their portfolio align with national priorities, and what specific demand trends are they sort of banking on?
Well, their portfolio aligns almost perfectly with national priorities like the energy transition, digital infrastructure, and manufacturing competitiveness. They have deep expertise in renewables, data centers, power distribution. They note that while maybe short-term private sector capital expenditure might moderate a bit, the structural demand remains stable, particularly in energy efficiency solutions, think green hydrogen, HVAC, clean energy, and industrial automation, especially in metals, mining, oil, and gas, that's being driven by customers adopting ABB's AI-powered solutions. So all of this combined with that healthy order book, a supportive policy environment, and just the rising need for electrification and automation, it's expected to drive sustained growth. Their strategic focus on localization, digitalization, and sustainability is really aimed at ensuring resilience and agility. And just on a shareholder note, the board of directors also declared an interim dividend of 9 rupees per equity share.
Right. And there's a pretty significant strategic move tucked away in that outlook, isn't there? About the robotics segment. The board approved appointing advisors to conduct evaluation of the robotics and discrete automation segment, with the intent to incorporate a wholly owned subsidiary to eventually house this segment as a separate legal entity. What's the thinking behind that?
Yeah, that's a big step. It follows their ultimate holding company's decision, that's the global ABB group, to spin off its global robotics division. So this strategic unbundling, it allows for more focused specialization. By separating the robotics and discrete automation segment in India, they can potentially streamline operations, maybe attract more targeted investment, and respond more agilely to the specific demands and innovations within that, rapidly evolving sector.
Yeah.
While the rest of ABB India focuses on its other core strengths like electrification and motion.
That's a really fascinating development to watch. And speaking of strategic focus, what are the key highlights of ABB India's sustainability efforts? How do these efforts kind of intertwine with the broader economic landscape and maybe India's national missions?
Their sustainability efforts are quite impressive, actually, and they directly align with initiatives like Make in India and Digital India, as well as the crucial green energy transition, which, let's face it, directly benefits ABB's business model. They've successfully reduced their greenhouse gas emissions, Scope 1 and 2, by about 87.5% compared to their 2019 baseline. They're well on track for their 2025 target there. Currently, half of their own manufacturing sites are now water positive and also certified as zero waste to landfill. That's 3 units for each, targeting 4 by 2025. They've also achieved 41% water recyclability, aiming for 50% by 2025, and received a strong rating from CRISIL for their ESG performance, environmental, social, and governance. They're even extending this commitment by delivering comprehensive sustainability training to over 50 of their suppliers across multiple divisions.
That's a very comprehensive approach. What about their community engagement, beyond just the environmental metrics?
Yeah, their community initiatives are equally notable. Things like strengthening the circular economy through supporting women in e-waste entrepreneurship, digitizing classrooms in government schools, opening a new community IT skills center, organizing health awareness camps, supporting STEM education programs, waste management facilities, and even borewell recharge solutions for water conservation. Strong ESG performance isn't just about being a good corporate citizen anymore. It really reflects robust operational management and contributes significantly to long-term value. It helps build resilience and attract investment in this future-focused economy. It shows they're not just profiting from growth, but actually contributing to the country's sustainable development goals.
Right. So to sort of bring this deep dive into ABB India to a close, what we've seen is a resilient financial performance, driven by strong revenues and a growing backlog. Even amidst those shifts in the timing of large orders and impacts from Forex volatility, the company seems strategically positioned to leverage India's industrial transformation. And they're making significant strides in their sustainability commitments, all while considering this major restructuring for their robotics segment.
Definitely. And it leaves you with a thought, doesn't it? As industrial automation and electrification intensify, and with companies like ABB India strategically unbundling or reshaping their core businesses,
Yeah.
what impact will this kind of focused specialization have on innovation and the overall market dynamics in India's evolving industrial landscape? Something to chew on.
A really compelling thought to ponder as you reflect on what we've discussed today. Thank you for joining us on this deep dive. We hope you'll continue your learning journey with us.